All right, everybody, welcome to the August 18th webinar, the second in the 2020 Storm Series. We have a esteemed panel today that we'll be discussing on conference call, and you'll be able to see them. Joe, if you'd like to make some introductions.
Thanks, Paul. Yeah, welcome to A Tale of Two Tales. And as Paul said, a second in the Demotech sponsored series of webinars on Florida's residential property insurance marketplace. Given that today we're going to be looking at some of the qualitative considerations, I think it's critically important that I would ask Fred Karlinski to present the antitrust statement prior to any additional comments from myself. Fred, would you please? Fred is the co-chair of Greenberg Troggs Insurance and Regulatory Practice, and well known to everyone I'm sure that's tuned in. Fred?
Thank you, Joe, and thanks for doing this today, and thanks for your leadership. The presenters and hosts require strict adherence to the letter and spirit of antitrust laws. Meetings conducted via webinar under Demotech's auspices are designed solely to provide a forum for expression of various points of view on the topic for such webinar. Under no circumstances shall any webinar hosted by Demotech or coordinated by the presenters be used as a means for competing companies or firms to reach any understanding, either express or implied, which tends to restrict competition in any way or impairs the ability of companies or firms to exercise independent business judgment regarding matters affecting competition. It's the responsibility of all viewers and participants to be aware of antitrust regulations and antitrust compliance policies and to prevent any type of discussion, written or verbal, that violate the same. To the extent anyone goes into any of those areas, we'll just call a flag real quick and get back to permitted areas. But again, Joe, thanks for doing this today, and thanks for the leadership that you and Demotech show in Florida and nationally.
Thank you. Thank you. And real quick, I think we're likely to be bumping up against our 1 hour. This will be recorded. If for some reason we run late and you have to drop off as an attendee, it will be available in its entirety. We called this second webinar A Tale of Two Tales because there's many people who are confused as to why residential property claims don't settle a bit quicker and why there's so much cost associated with some of those straggler claims. And so we wanted to have a discussion rather than look at the numbers and the operating results, which are all, I think, public information and out there. We wanted to have just a candid conversation amongst the parties. And so I've asked for this panel discussion. I think Lisa Miller, you've got the first panel. If you would like to introduce briefly your panelists and get on with the conversation, I think that would be invaluable.
Thank you so much, Joe, and we are all very grateful to have the time with our listening audience today, many of whom are from all around the country and some around the world. Today we have joining us panelists that will discuss what I'll call the litigation runaway train, if you will, in Florida, and some of the reasons behind it that we as panelists believe are causing it. Kicking off our panel will be Roger Dezijon. He is the leader and CEO of Florida Peninsula Insurance Company. Following him will be Mike Monteverdi, and Mike is with the Zinnober Diana Monteverdi firm, and they are soldiers and warriors in what sometimes can be considered a very gruesome fight in the courtroom. Following him will be Mohammed Sharif, and he is with the Mubarak, Sharif, and Oladipo firm, and they do great work on behalf of policyholders. And I enjoy having spirited conversations with Mohammed frequently. And closing out the panel will be Paul Handerhan, who is the president of the Federal Association for Insurance Reform. So a very distinguished panel today, and I'm privileged to host them. And without any further ado, I thought I would let Roger Dezijon. This is going to be a very informal discussion. I think the content of this will be quite enlightening. And of course, we invite your commentary afterward. Certainly you can communicate with me and I can share it with the panelists, but I like to engage the audience as much as we can. Won't be able to do it here, but we can certainly do it after the program is over. So Roger, if you could kind of open with us and tell us what's on your heart and what you're seeing on the ground in Florida every single day as a leader of a great insurance company.
Sure, I'll do my best. Thanks, Lisa. I really appreciate it. Joe, thanks, by the way. Good timing, and I appreciate you asking me to do this. I really do. Where do you start? Few people would disagree, I think, that the Florida insurance market is at a crossroad, facing availability, pressured affordability, less insurance investment down one path, versus rational and effective political and market change down the other. The question really is the path that's going to be chosen take us from nowhere to nothing, ignoring what's really going on in this market and rationalizing slow measured change, which I refer to as eating the family pet one limb at a time? Or are we going to say enough is enough and face the reality that without dramatic change in claims, legal, courts, political environments, availability and affordability of property insurance, frankly, is likely to get worse, not better? In the past several years, this industry has seen some pretty remarkable things: ongoing attritional loss deterioration. I'm old enough to remember the days when typically Florida had 15% attritional losses, and then occasionally a 200% loss ratio when a storm hit. The opposite's true now. It's seen Irma estimates go from $9 billion to $17 billion, rapidly escalating reinsurance costs, rate increases of 10, 20, 30, even 40% in some cases, an explosion of lawsuits, which I think Wesley will probably talk about. The Citizens PLA account is starting to grow again. More and more first notices of loss and claims reported by third parties. Even roofers giving $500 gift certificates to people throughout the state, saying, "Let me climb on your roof. I'm 99% sure you have a claim." Even several of my partners have received those gift certificates. Hopefully, they didn't cash them in. And the uncertainty to the business and the economy. Let's not forget that, and what's going on with COVID. So, make no mistake, falling insurance availability and rising cost is going to impact a large part of the Florida economy. This robust real estate market that's always existed here, home construction, retirement, on and on and on. If you consider that people, if you believe this, I happen to, but that people are primarily driven by money, power, sex, and religion, and you can pretty much eliminate sex and religion whenever you talk about insurance because it's pretty dry, but you're left with money and power. And insurers really don't seek power in and of itself, and it's one of the most heavily regulated and legislated businesses anywhere in the country, let alone Florida. So ask yourself about the other parties in the claim melee that's taking place here. And what happens next is really going to have a huge impact. So what in my opinion needs to change, and I'll try to be quick. First and foremost, this state needs a fair and balanced approach to tort reform. We need a system where an insured, if they have a claim, if they have a dispute, and they sue, they get a payment. But the payment should not result in attorney fees that are many, many, many multiples of the payment to the insured. It's not unusual for someone with a $20,000 or $30,000 dispute to have their attorney get $100,000 or $200,000. There needs to be a link between what an insured receives and a legal payment. The current system promotes bad behavior and it rewards the wrong party. Second, it needs legislation to redress what's fostered a shift. Insurance is supposed to be risk protection. It's turned into a maintenance contract. Replacing roofs and floors and buildings because of small maintenance type damage is not what this product was ever intended to do. And yet that's largely what it's become. And quite frankly, as the economy suffers under COVID, it'll probably get worse before it gets better. We need to abandon the bizarro world where it takes 3 years to discover whether you even have damage. Think about that for a second. A storm comes through or the wind blows, nothing's happened to your house, not even a shrub has been torn up, but somehow it takes you 3 years to determine whether or not you had a loss. That's ridiculous. And then you get 5 years from a breach to sue after that. So, people refer to it as the gift that keeps on giving, and it is. And it creates uncertainty in the market. It creates uncertainty in the reinsurance markets, which I'm sure Mark and David will talk about. But the uncertainty doesn't help the situation at all. That needs to change. Personally, I think it needs to go back to a year. We need to revert Citizens back to what it was originally intended to be, which is a market of last resort rather than a market of first resort. And we need to rethink some of the ways that the Florida Hurricane Cap Fund is used and how it can be used to improve the stability of the overall market. Notice I didn't say compete with the reinsurers. I said improve the stability of the market. That's what it was intended to do. And there are a lot of very detailed aspects of it that we can change. So I'm sorry for talking so quickly, but there's plenty of people here that have a lot to say, and I'm anxious to hear what they have to say. So thank you, Lisa. Thank you, Joe.
Thank you, Roger, for kind of setting the stage here. I know you're very passionate about what we can do to make it better for your policyholders and all of them across Florida. Mike Monteverdi, you've heard it here first from a CEO who lives it every day and gets thousands of claims just because sometimes. What are you seeing in the courtrooms? What are you doing to try to see if we can't get to a better place?
Thanks, Lisa. I think one of the things from my perspective on the defense side and handling a lot of these claims and defending a lot of these claims over the past 12 to 13 years, there's been an interesting kind of evolution of how the market has changed and how the defense of claims and how the prosecution of claims from the policyholder side has changed, which has kind of, I think, gotten us to the point where we are, which some may argue is a breaking point. I think Roger might say we are at a breaking point. I don't necessarily disagree with him. I started doing this and cut my teeth on a lot of it during Wilma. And it was kind of interesting during Wilma because people didn't necessarily know exactly what they were doing. And I think everybody on both sides learned a lot of things. There was a lot of trial and error on both sides. There was a lot of case law and appellate opinions that came out that kind of created much more of a framework than even after Andrew for what we deal with now. And I think that that's gotten us to the point now where we're running into some issues that were created by that, or at least the experience of the people handling the claims has created a much more difficult environment, I think, for insurers, the way that things have kind of changed with 627, 428, and the way that that's all kind of evolved. Interestingly, after Wilma, I left and stopped handling any first party work for about 3.5 to 4 years. And I came back in 2016, about 2015, 2016, and started working on first party claims again. And the thing that shocked me was there hadn't been a storm in 11 years, a real storm in 11 years. And it was worse in a lot of ways than it was even during the height of the Wilma litigation. And it's because this cottage industry was created that ultimately had nowhere to go. There was no outlet once the Wilma claims were gone. So then new claims were created. And then when Irma came along, everybody was in place. Everybody knew exactly how to work this system. Everybody knew where the pressure points were. A lot of people from the defense bar switched sides and went to the policyholder side. And ultimately, it created this kind of confluence of events where you just had everybody in place, from the public adjusters to the contractors to the plaintiff attorneys, that really made it open season in a lot of ways on insurers. And I'm not a true believer. I'm not somebody who says that you should abolish 627, 428 or anything like that. I understand that there are many, many legitimate claims and that there are very good reasons for the way that things are set up in Florida to some degree. But I think to an extent they're being abused. And I think that it's really dangerous where we are, because if we keep going down this road, I think that it could become very, very problematic for everybody, most importantly, the consumer. A lot of times people talk about attorneys, they talk about contractors, they talk about public adjusters. One of the things that I see that there is an issue, I think, with courts not being completely well versed and maybe what's going on, and not necessarily understanding that there's a difference between certain policyholder attorneys and other policyholder attorneys. And I would probably estimate that there's 15% of the actors out there that are the problem, and they're probably causing about 95% of the issue or the problems. You have the majority of attorneys on the policyholder side are doing what everybody else is doing. They're doing their job. They're representing their clients. They're fighting for them. They're having people come to them with problems, and they're trying to resolve those problems, and they're trying to work to a resolution. I think in most instances with the insurance carriers and with the defense attorneys, but there's 15% of the actors out there who are gaming the system, and the system has been set up so that you can game it. And so it takes really, really kind of thoughtful, strategic approaches on the defense side and on the carrier side to make sure that claims are handled correctly, that they're dealt with in the appropriate way, and that the defense of the cases are analyzed correctly from the beginning, to avoid a lot of the problems that can come down the pike if people aren't careful. One of the things that's really out there that's really kind of changed the system in a lot of ways is you have this fee multiplier issue that's really been now incorporated into property insurance policies in 627, 428 claims. And a quick story, I had a talk with an attorney on the policyholder side, good attorney, nice guy. I get along with him very well. And he was complaining about his fee on something at one point. And I said to him, we'll say his name's Jeff. And I said, Jeff, come on, you're talking about, if this case goes down the road, you're going to get a multiplier. I understand that. I said, but how many? I said, you recover in 99% of your cases, you get attorney's fees. And he looked at me and he said, no, I don't, Mike. You're crazy. It's not 99. And I said, okay, how many is it? And he kind of paused. He got a funny smile and he said, 97%. And I said, yeah, it's 97% of your claims that you're recovering your fees on. There's no risk here. There's no reason for a multiplier. The issues and the reasons for multipliers shouldn't exist in this world. Things like, well, you couldn't find another attorney to handle the claim. Between me and the closest public, there's probably 9 attorneys or 10 attorneys who would handle these first-party claims, because the fee statute has created a situation where it's really, you're going to get your fees on almost every single case unless somebody really digs in and fights. And so you end up in a place where the tail's wagging the dog. In the commercial context, you don't have that. In the commercial context, you have very large claims where the fees are not necessarily as large of a percentage of the recovery. But in the residential context, on a lot of these claims, the fees become the driving force very, very, very quickly, and that becomes a problem. Because then ultimately in a lot of, go ahead.
Hold that thought, Mike. Hold that thought, because I want to get some input from your counterpart, Mohammed Sharif, who's listening to you talk about fees, what the game is, understanding the game. Mohammed, what are your reactions to this game, to what a lot of the defense attorneys who are seeing the game? Is it a game, and are you playing it?
That's a great question. I will say, my representation is on behalf of the policyholders, so I will do my best to just focus on representing the policyholders that I've seen and the ones that fit into this conversation. And I think the ones that we would define it as a game, I don't think are ones that I'm talking about. I don't think it is a game. When somebody has property damage, it consumes their life. We got to think about the legislative intent of 627, 428 and what we're talking about. I can certainly appreciate Roger's comments, and I've been on that side, and I can appreciate the commentary about being able to stay in business and operate and provide coverage. But the average homeowner that we talk to is confused. They're confused because they're not informed about the process. The power is with the insurance company because they have the resources, and that's the intent of 428 is to sort of level the playing field to ensure that you don't have to be penalized by bringing forth your claim because you have to assume any type of risk. And I think part of the discussion we hear often, especially with the legislative reform that happened last year, is that assumption of the risk that gets passed off in the fees and the PFS. And that's the part of the gamesmanship that definitely exists, because if you're an insurance company, you know that time is something that can be leveraged at the expense of the insured, because that's generally going to exist no matter where you are and what stage of the litigation, because that's where the resources lie. So understanding that that's how the gamesmanship works, yes, there's definitely an element of gamesmanship in the process, but I don't think homeowners and policyholders are necessarily looking at it as an opportunity for gamesmanship. So I don't think it's a game. I think it's unfortunately something that we have to deal with, which is making sure that consumers and policyholders are not penalized for bringing a claim when they haven't had the type of claims handling that we should be having in accordance with the statutory requirements and obviously the expectations that we have on the industry.
Mohammed, if you had one wish, before you go, Mike, if you had one wish on behalf of policyholders that insurance companies could deliver, I don't want to put you on the spot, but what is it that an insurance company can do? What do you think is the common thing you hear the most when policyholders call you and complain, I can't get them to listen, I can't get to a better place here? What is that, Mohammed?
Yeah, they're confused. They're confused because they haven't been given information. I think there's a general reluctance from a lot of insurance companies to say certain things early on in the process. They don't want to overcommit, but there's definitely a way to make the policyholder feel as though that they're informed. And I think when we get the conversation and we're the first ones who are giving them an informed understanding of what's happening, that's a problem, because at that point they've probably been through a lot. and a lot of time has elapsed. So I would say things that I would like to see are tighter communication, better communication, but sometimes just communication at all. We don't see it sometimes between the insurance company and the insured, and obviously that's a problem, and that's part of the reason why this happens is a breakdown in the communication. But if we're going to be able to, if I could see one thing different, is just to help the insureds make an informed decision about what's happening in their claim. Oftentimes they've signed with the PA, they've signed with the contractor, they've signed an AOB, and they don't necessarily know that they've done that. And the implications of that, I think that's a problem.
Paul Handerhan. Mike, I'll put you back on in just a second. As the consumer representative with the Federal Association for Insurance Reform, you're hearing a CEO tell you the place is broken, a defense lawyer telling you it's a viper pit in the courtroom, and a policyholder attorney telling you no one's talking to the consumer. What are your thoughts?
Yeah, well, thank you, Lisa, and thank you, Joe. Appreciate the opportunity to participate on the panel. At the end of the day, I think what resonates with legislators and regulators is how the market impacts consumers and the overall economy. And unfortunately, if you look at the marketplace right now and how consumers are being impacted, what do we see? Reinsurance rates are going up, underwriting is becoming more restricted, you're seeing citizens' property insurance beginning to repopulate. Those three things are not good for the insuring consumer. That's less choice, higher rates. And what's the reason behind that? It's not rocket science. I mean, it's very clear. We've had an increase in frequency and severity of claims that has created an environment where insurance companies need more rate, and until they get that rate indication, they are not going to write more policies. So that creates a very disturbing situation for consumers in the state of Florida. So, what's the reasoning behind that? Yes, there are a number of stakeholders in multiple industries who are putting their own financial interests ahead of consumers. I mean, it's happening. It's going on in the real world today. We all know about it. But I agree with Michael Monteverdi. It's 15% of the population of stakeholders who are being the most disruptive. So we need to figure out a way to identify who these stakeholders are, figure out what the bad behaviors are, and work with regulators and legislators to get rid of this behavior. I mean, it's that simple, and we need to do it all together. I would just like to share with you one example. So our CEO, Jay Neal, has damage to his roof right now. And we had an engineer go out and look at the roof, and it was determined that it was a long-term maintenance issue on his roof where the flashing was leaking, nothing that would qualify as an insurance claim. We decided to do a test case, and we reached out to one of the roofing companies, which everybody probably knows, I won't name them, but goes around and markets that they can handle insurance claims. So we had them come out to the property. They showed up with 3 individuals with a drone. They droned the roof, and they came down and they told our CEO that you have damage from Hurricane Irma, that they can handle the insurance claim for him, and that they could get him a brand new roof. Now, we already knew previously that that wasn't the case. And my assumption is every single roof that they go out and they look at, they're telling homeowners the same thing. So, Mohammed said that there is this, knowledge gap that consumers don't know. When I spoke to Jay said, listen, these guys, came off very credible, very technical, and he's, within the industry. Imagine an average homeowner who doesn't know any better. It's very easy for them to get caught up in thinking that, hey, this is a valid claim. They're being steered by these actors. And one of the other things I would say, these are not licensed insurance professionals. And it's broader than just roofers. It's contractors, it's loss consultants, it's roofers. It's a bunch of third parties that are going out there trying to make as much money as they can. So, the issues are real. I hear the frustration from Roger. I'm empathetic on what his company's going through. His company is not the only one. There are other companies that are struggling. If you look at the second quarter financials of this year, they're terrible. I mean, most of the companies have lost millions and millions of dollars in the second quarter, and most of it is being driven by suspect claims or nuisance claims. So FAIR is committed to working with all the stakeholders to help identify who these actors are, exactly what they're doing, and work on legislative reforms, working with the Florida Bar, and working with regulators to put an end to this nonsense. And that I'll
Thank you
yield
for-
my time to the other panelists.
Thank you, Paul. We've got about 5 more minutes, and I wanted to turn it back over to Mike Monteverdi, who has single-handedly working with a couple of shall I say, trying to change the behavior of a couple of roofing firms through the judicial process. May not be able to talk about it specifically, though most of it's public record. But Mike, I throw it back to you in discussing the courtrooms themselves, the thousands and thousands of lawsuits that our good friend Wesley Todd tracks for all of us through CaseGlide. Maybe some examples of those cases, a couple of just, and what maybe you see could have been done differently by the insurance company, what could have been done differently by the policyholder, and what could regulators have done also?
So, you asked Mohammed a question, and I thought it was a very good question. What would he like to see from the carrier's perspective? And I think from the defense bar's standpoint, if somebody were to ask, what would we like to see from the policyholder side? I think one of the things, and I think Mohammed would probably agree with me on this. I know immediately when I pick up the phone and I call a plaintiff's attorney, whether or not I have a willing partner on the other side to try to resolve something or whether I don't. And I think that Mohammed would tell you that he probably in most instances knows the exact same thing when he picks up the phone and calls a defense attorney. Because again, going back to what Paul was saying a second ago, the 85% are trying to do the right thing. It doesn't mean we're always going to agree. There may be very heated disputes about cases where there are actual facts in dispute that ultimately have to get tried. But when everybody has the best interests of their respective clients in mind, then ultimately I do think that there's a way in most instances to get to a place where you can probably resolve a claim, or if you can't resolve it, at least you can go forward and litigate it and handle it in a way where everybody is kind of operating above board. The bigger problem is that when you get to these claims where there's no interest, and look, I'm talking about a small number of players, but they have a lot of cases. And when you're dealing with people who I don't believe have their client's best interests in mind. And when you deal with that, it clogs up the court system. It creates huge expenses. It creates huge risk exposure. It dictates behavior by all kinds of different people involved in the process. And one of the hard things is trying to kind of get the courts, and they're busy, right? Their dockets are overloaded, so it's not necessarily their fault. But to get the courts to understand that there's a difference here. Everybody who comes in here is not an honest broker. Everybody who's coming in here does not have the best interest of their clients necessarily in mind. And I think that there's got to be a way, and I think that, we try to have that fight, but sometimes I think that what the carrier side does wrong, I'm talking about the attorneys, not the companies. The attorneys fight the wrong fights sometimes. And by fighting the wrong fights, you become kind of the boy who cried wolf. And you show up and you're pointing the finger at somebody who probably is maybe a decent attorney who has the best interests of their client at heart, and you're accusing them of all kinds of things. And I think you need to reserve that for the actual truly bad players, because I think at that point the judges might start taking that a little bit more seriously. I'll very quickly say, because I don't want to kill the time, 627-428, I agree with the underlying spirit of it. I think that you do need to give an insured their attorney's fees so it doesn't come out of the money for purposes of repairs. But there may be better ways to balance that between the two parties. And I don't know if it's by utilizing the PFS statute both ways or how to do that. But there's just got to be a way to kind of rein it in a little bit, because it has been, I think, abused by certain players over especially the last 4 or 5 years. It's gotten really out of control.
Thank you for that, Mike. And I'm going to let Roger Desajon close this panel out, but I will also add this to each of you. I got a call this weekend from a COVID nurse. She and her husband are COVID nurses, signed documentation with a roofing company, realized they made a mistake, can't get out of it. And her single question to me was this: I've never heard of a vendor, when a customer says, I really don't want to do business with you anymore, to make that customer stay with that vendor. She said, I don't understand that. And I think that's the crux of the issue, that a lot of times consumers realize that they've gone to that vortex of contractual relationship with a vendor and they can't get away from them. So Roger, I'll turn it back over to you to close this out. You're where the rubber meets the road. You're providing the coverage for the policyholders. You're determining what those rates should be to be able to pay those claims, and you're living it every day. So give us the last word.
Thanks, Lisa. I think that making any attempt to argue that more communication with policyholders is not a good thing is a lost. That's a lost effort. I would never suggest that. The more you talk to consumers, the more you talk to your policyholders and your customers, the better off you are. My one fear going into this next legislative session, and frankly, my fear for the next year or so in the state of Florida, is that if we're not careful, we're going to cut right through the heart of the matter and get directly to the periphery. And we're going to go after issues that, quite honestly, we delude ourselves into believing are going to make a difference. Thinking that we can identify, I'm randomly picking a number, the 10 roofing contractors that are the culprits and everything is going to be a kumbaya moment is a total falsehood. The one thing that I've learned after almost 20 years working in insurance in the state of Florida, 15 years with Florida Peninsula, is it is a whack-a-mole. There is too much money being made. And when you have a situation when a third of the claims are reported not by an insured, but by a third party, usually represented by an attorney, that should tell you everything you need to know. There are good people, there are bad people. No one could argue that. But the reality is, if you have an environment where the laws are created to structurally favor a type of behavior, you're going to get that kind of behavior, period. It's not an accident that millions and millions and millions of dollars in attorney fees have gone out in Irma, and the same with roofers. So I don't want us to just focus on trying to find the 10% of bad roofers or the 5% of bad attorneys. The truth is, there are good people, there are bad people, there are opportunists. And if we have a set of laws that make sense, and they're laws that are consistent with what is done in other markets in the United States. And by the way, a lot of what exists in Florida doesn't exist anywhere, which is why I call it bizarro world. If we have a set of laws, then people are going to do the right thing. They're going to follow the laws, and the judges will have no choice but to follow the laws. And we'll finally get some of these issues surrounded. So thank you very much. Again, I hope we can continue having these conversations. I think it's very, very helpful. So thanks, Joe. Thanks, Lisa.
Thank you so much, Roger. For those of you in the viewing, listening audience, we had about an hour and a half prep call for this session. And I've been doing this a long time. And this team that's here at this group with Joe's leadership, I think we can get things to a better place, both legislatively, from a communication standpoint, and from a regulatory standpoint. Joe, I'm going to turn it back over to you. Thank you for giving us the opportunity. What's up next?
Thank you. I'm going to ask if there's any questions from the group. Paul Osborne, do you want to tell us how they can submit a question or two?
Yeah, if we have time during the webinar, any attendee can go ahead and type a question into the question portion of your panel. We might try to get to it. Otherwise, we will be sending out a copy of the webinar video to be watched later. And at that point, you can respond with any questions for the panel, and I will distribute those and they will get back to you.
Thanks. Thank you, Paul. Yeah, I think the second discussion, I think that to the extent that, communication is part of the issue, part of the communication, if there's going to be reforms, is discussing those reforms, convincing a legislature that something's required. And I guess I wanted to talk to this group. Fred joined us, Paul, Lisa, and we have David Unsworth and Mark Lorestella from Tiger Risk. We want to talk a little bit about Wesley Todd, of course, with CaseGlide. And we want to talk a little bit about how do you convince? Is it data? Is it stories? Is it personal relationships? How can the message be conveyed to a legislator and a legislature? And maybe I'll start that with Fred. If you have a thought on that, you work nationally with dozens and hundreds of legislators from coast to coast. I mean, any thoughts on that?
Well, thanks, Joe, again for putting this on and for having me and for your thought leadership in this area. It's important. And I'm going to answer the question you just asked. quickly in 1 second, and then I'm going to, I've done enough debates to know I'm going to answer the question I want to answer also. But the answer to your question that you just asked is D, all the above. It is the data, it's the personal contacts, it's the media, it's everything you need to do to get out there and get to know these folks. It's the personal relationships. But I want to react a little bit to what was said earlier in the other panel, because I think it's important. And I think from a rubber meeting the road standpoint, there are some things that I want to at least address. And the first is, I heard a lot about numbers and statistics. And let me just say that the best statistics around is that 95% of all statistics are made up. So think about that for a second. But here's the bottom line. Let me give you one statistic that's not made up and one statistic that rings true. 100% of consumers in this state are being hurt by the social inflation and by the fraud that is going on every day. And the horrible thing that we have in the state is, you know, we used to call the state uninsurable because of hurricane risk. And hurricane risk is certainly devastating. It's something that is transformative to a community, transformative to a state, and it clearly can have a huge impact. Here's the funny thing. In the state of Florida, where we have a CAT fund that has, you know, over $10 billion in cash, where we have a Citizens that has over $10 billion in cash, where we have laws, deductibles, knowledge, leaders who are dealing with hurricane issues. We have hurricanes. We understand what needs to be done here. We may not be able to reinsure and insure up to a 1 in 500 year storm. I'm not sure anyone on the eastern seaboard or on the Gulf Coast can, but we get hurricanes. What is uninsurable in the state of Florida, what's caused us to be in the situation we're in, are the man-made issues. Mold is gold. Sinkholes that are really cracks in tiles, AOB, and now these roof claims. And I can tell you, as living in the state of Florida, I probably get once a day, it was discussed earlier about the gift cards in the mail. I'm getting one of those a day with a note saying, call us before September 11th, you're going to get a new roof. So again, the statistic I know that is a fact that we can use as data across the board is that 100% of the people in the state of Florida are paying for those fraudulent roof claims, and that's really bad. Now on to your question, Joe. I think a lot of things need to be done. Some of the things the insurance industry has done over the course of time have been really good. Others have not been up to par with the trial bar. And again, I'll go off script a little bit here, and that is to say, I'm not sure I fully appreciate why the trial bar even does or should have a seat at the table on this. And they've done a great job at creating that seat at the table. Because if you think about it, these insureds, long before they ever have to go to an attorney, which I don't even think they should have to in most cases, in 99% of the cases, again, a made up statistic, but before they go there, they're customer. They're the customer of the insurance company. So someone mentioned earlier, why should we not be able to communicate with these insureds? We should be able to. We should, in fact, be able to communicate with them. And it should be something that we should all strive to do. So a couple things in the legislative process I think are important. You mentioned data. I think the industry sometimes does not do a great job at getting the data out there. Sometimes it gets lost in the shuffle. That's a double-edged sword, because for every piece of great data that we have, you have the widow who lost their spouse in a war overseas, who somehow got canceled by an insurance company while that person was overseas. That blows that data out of the water. So what I think is critical, and what I think we're missing in a lot of cases, and someone mentioned earlier the fact that between their office and Publix, there's probably a dozen plaintiffs' attorneys who will handle any of these cases. Those plaintiff attorneys are getting to know their individual legislators. They're going and talking to members of the legislature and expressing to them what they think the concerns are with this particular industry. And I think that's something that is, and that's something that the insurance industry needs to do quite a bit more. While anecdotes and data will help, the personal relationships that you create from explaining to an individual legislator and then ultimately the legislature how insurance, how it works. I mean, we're no longer in the world of risk transfer. We're in the world of risk financing. And if you look at risk financing and you look at a $2,000 premium and you look at a $100,000 roof that's put on fraudulently, you don't need to spend a lot of time in math class to understand that the numbers don't add up, and the legislature will understand that as well. So I'm oversimplifying a very complicated matter. Someone earlier said that this is a game. My sense is this is not a game under any set of circumstances. There is no game when you've got people that can't afford insurance and companies are going out of business all because of fraud. So, Joe, to get back to you, I think the data and the relationships and the messaging are very important, but we also need to make sure people understand that what's going on is pure fraud, and you can't rate and you can't price for pure fraud, and it affects each and every one of us. Insurance fraud is not a victimless crime. It affects 100% of the ratepayers in the state of Florida, and that's not good business, and that's not good for the state of Florida.
Thank you, Fred. Lisa, if we can go to you quickly, and then I want to take a different approach for David and Mark, and then we'll wrap up with Wes and Paul.
Sure,
Same
and I think
kind of question. How do you suggest we get the message across?
I try so hard when talking to legislators to bring it down to them, particularly when I talk to a constituent. I do a lot of pro bono work, as everyone on the call knows, and people find me on the web, and I still have that as a carryover from my days as a regulator, where I really care about consumers and what's happening to them. Policyholders are humans, and they struggle, like we heard Mohammed say. They don't really know what they're doing, or they got locked into these contracts, which is crazy. And so when I find and talk with people like I did this weekend, this COVID nurse, she and her husband being COVID nurses, I asked them where they lived. And then I shot a note to the legislator from that area because I'm seeking their help. These legislators need to feel the pain that we feel every day with consumers that are struggling every day, that get locked into these, what I'll call, the vices, the vice grips of some of these contractors that don't really have anybody's best interest at heart but their own. So I think when talking to legislators, I use the phrase get real. Let them see the actual consumer that's been harmed. Let them see the contracts that they've been locked into. Find out how much it's costing that policyholder. Someone told me this morning that one of their policyholders lost their homes because of a contract they got locked into with the ensuing court battle behind it. And so I think letting legislators understand what we live every day and making it real for them is a great communication effort to get them to come to the table. Others think it's nothing but campaign contributions. That's the only way to get them to do things. There are those that believe that, you've got to go do a sit-in their offices. There's just only so many ways to get their attention, and the way I do it is down to the brass tacks and out of the communities where these consumers are being harmed. So thank you for that, Joe, and I'll turn it back over to you for some of our distinguished reinsurance colleagues.
Thank you. And I think what I'm hearing when I hear people talk about legislative reform and many drivers of insurance costs is I hear uncertainty. There's uncertainty as to what's going to happen down the road, and I think the investment community, from what I understand, hates uncertainty, and so I think the reinsurers in general probably hate uncertainty. So I'd like to get some thoughts, Mark Laurcella, David Unsworth, Tiger Risk Capital Partners, your thoughts on what you're seeing on the investment side. Does that show that there's uncertainty in the marketplace in Florida?
Thank you, Joe. Appreciate everybody's involvement this morning. To Lisa's comments, this is a really good forum for us to get together and talk through Florida challenges and issues and to move it in the right direction. At the end of the day, the Florida property market has been a market of typical cycles that we have seen for the last 30, 40 years. Really, with the advent of Andrew, it really changed the face of reinsurance and what stability was all about. And it actually brought in what is now the cap models, which help create certainty around hurricanes. And those market cycles were driven by a cat loss, which would increase rates, and then new capital coming into the market, which would back off the insurance rates and the reinsurance cost associated with that. We've been talking about uncertainty. As investors look at the Florida market in its current status, there is less there's less certainty with respect to the market. And there are three main facets of where that certainty has been reduced. One is the social inflation, which we've talked about, the loss multipliers, the one-way attorney fees, the litigated claims. It's bringing in a new source of loss that is hard to model, hard to quantify. Therefore, investors are pulling back. If there was greater ability to charge a lot more rate, they would be probably lining up and willing to take that potential uncertainty. But given the current market, we're not seeing that just now. I mean, we obviously at Tiger Risk have several large insurance companies in the state providing some very strong coverages at fair rates. The problem is when you stack on the losses that have occurred over the last couple of years from cats, but more importantly, the social inflation that has followed it and the changing climate. And I'm not a client, I'm a climate concerned guy, but there is a change in the climate. I mean, I'm from New Orleans, Louisiana originally. Spent a lot of time in Florida, in fact, living in Florida right now. The type of storms we're getting now compared to 15, 20 years ago are dramatically different. You didn't see convective storms. It's as far south as, below Tampa. You didn't see them in Louisiana, in New Orleans either. All of a sudden, you're seeing just a much different profile of storm and a much different profile of frequency of those storms on top of the normal cats. And now, the cat modeling companies only have so many cats they can actually model within their storm sets. Every storm today appears like it's something new and different we've never seen. And part of this is the social inflation that's dramatically increasing losses. So if we can get a handle on some sort of tort reform that manages that, I think it would certainly help the market, and it would bring the interest back for investment into the state. But as long as loss creep is a big part of a cat event, it's gonna continually dent that market. The attritional losses may be increasing to a small degree, but it's being overwhelmed by the social inflation and these smaller cats we're seeing. And so, the reinsurance market, as we've seen this past couple of years, is also changing from the standpoint of not just pricing, but coverages. So as a reinsurance buyer looks at the coverages dwindling, they have to go out and buy other reinsurance type coverages to make up for the loss that was in their original contract. So not just the price of a single contract, but insurance clients are now looking to buy more different types of contracts for difference in coverages. And that's actually causing some additional cost as well. At the end of the day, the market is interested in supporting Florida, the investment community, and there's still an opportunity here, but there needs to be some sort of tort reform. I think Roger did a really good job in isolating the importance of tort reform in the coming years, because without that, Dave, myself, Brian O'Neill, the Tiger Risk team has difficulty seeing a way forward for a stable market. And without a stable market, everything we're talking about gets very, very complicated. Dave, I don't know if you want to add some comments to that.
I think you did a very good job covering everything, Mark. I would say that the creep that the reinsurance market has seen with Irma as a result of the fraudulent claims, the social inflation, the late reporting is certainly new from their perspective and adds that unmodeled uncertainty that they have to charge for. And we saw that manifest itself in increasing rates. Put COVID at this renewal to one side, the continued development of a cat loss, Cat 1 hurricane 3 years ago, still bleeding into the reinsurance towers as it is now, focused their attention on what they hadn't been pricing for when they were providing that coverage a few years ago. So without that, without those changes coming through to stem the tide of unfair claims, fraudulent claims, the reinsurance market are going to continue to price for that. A change where they don't pick up, these fraudulent losses will, I think, result in them becoming more comfortable with the cat risk, the modeled risk, and that will translate itself into lower reinsurance costs that then benefit the insurance carriers, and they can pass on those savings to the insurance community.
Yeah, and so one just other comment, I'm sure that people are interested in what is the expectation of cat pricing going forward in the market. I would say it's fairly stable, although there is some new reinsurance capital coming into the market, as many as you know. RenRe just expanded their capital by over $1 billion. There are other companies doing the same, but they're seeing a continuing hardened market going forward, not just in Florida, mind you, it's worldwide, it's US, it's 1-1 transactions, it's a lot of global business, a lot of the business from casualty to marine, aviation, all that seems to be going in a increased pricing environment for the time being. But the new capital and tempering whatever cat events do occur will impact 1-1 and 6-1 cat pricing. And it's still to be determined, but if it's a fairly mundane cat market, cat season, and there's no major financial issues in the financial markets, we would expect a fairly flat year-over-year cat reinsurance renewal.
Thank you. Thank you.
Joe,
Wes, Wes,
I'd love to.
I'm sorry, Lisa. I want to get Wes in here, and we're running. Wes, you started Case Glide because you saw what was happening at the company level and the consumer level as a defense guy, and you started Case Glide years ago to address that. Share your thoughts, if you will, on kind of how you see the numbers shaking out now versus what you did a decade ago before you started Case Glide.
Well, you don't want the answer to that question. I used to handle cases for Mohammed when he was at Nationwide and Roger at Florida Peninsula, and we're a far way away from 10 years ago. A lot of the data that we're seeing now, it's mostly Hurricane Irma claims as we approach that deadline in just a few weeks for the claims filing. Litigation levels in July of 2020 are up 10% over June of 2019. And they were already elevated at that time, as we all know. And then when we went from May to June of this year, we saw a big 15% jump in litigation, which is enormous for a month. But the other, there's some positivity or plateauing, if you will, that's possible. And we get to see this with dozens of insurance carriers we work with and the thousands of law firms. And once we got to July, the litigation leveled off. So the hope is that we plateaued and these terrible numbers won't get any worse from a litigation standpoint. And then I think most, if we were doing this webinar 2 years ago, these companies, their litigation departments are much more sophisticated. They have great infrastructure, most of them, and can handle this litigation in a way that probably cost them significantly less per case. Now, again, they have a lot more cases, but cost them a lot per case than it did just a year ago or just 2 years ago. So, to piggyback on what a couple of the folks earlier said about social inflation about this market. I don't think it's a coincidence that the largest plaintiff's law firm in the world started in Florida. And, we can, pick apart and parse through the nuances here and there, but the environment is broken, as has been, said by so many folks on today's panel, so many experts, so many different perspectives. And, that's all the, to Fred's point, that's all the data you need. There's got to be a reason why the largest plaintiff's firm in the world started in our state. So thanks Demotech for the opportunity to share, and thanks for the expert panel and getting all these perspectives. Is a big inflection point right now. We got to win this battle for the industry.
Yeah, Paul Hanrahan, I give you, I'll let you wrap up your thoughts on how to convince and how to work. You got, I think, a great business model for trying to have all stakeholders at the table. I just want to mention one thing, and then I'm going to turn it over to you, Paul, to bring us home. Michael Monteverde actually said something that was that gave me a thought. In 1992, when Andrew struck, I think 20 companies went under because they didn't have enough reinsurance. From 1996 to date, when Demotech got involved, one of the things we've been doing is companies purchase more and more reinsurance. The ultimate irony there is, with Andrew, a reinsurer could write a check and be done. As companies buy more and more reinsurance, the reinsurer now becomes a partner over the entire period of claim settlement because the companies are staying solvent. So Paul, you've got all these different dynamics and stakeholders in 2020 with a different situation than existed when they put the infrastructure in place for the JUA and the CAT fund. How do you get this reinvented 25 years later?
Yeah, well, thank you, Joe. And I agree with Freddie. I think you have to take a holistic approach. But as it pertains to the data, I think there's an important metric that insurers can start tracking. My assumption, personal assumption, if you look at the AOB litigation rates, they're on the decline. But in tandem with that, you see first-party litigation on the rise. I believe what's happening, those third parties that were filing AOB lawsuits, they didn't just leave and exit the market when we passed the AOB law. I think what's happening now is you have those same third parties that are still out there soliciting claims. As soon as they get those claims, instead of filing an AOB lawsuit, what they're doing is they're passing it over to their favorite plaintiff's attorney, who is then filing that lawsuit. So that's going to be an important metric, because the legislature, when they say, listen, you told us the problem was AOB lawsuits are down. Now you have policyholders filing claims, identifying those third parties who will pop up later in the litigation cycle, I think will be an important metric to be able to show legislators. I think Lisa was correct also, looking at it at the grassroots level. Don't wait for the legislature, to convene. If you have a policyholder that has been injured by any stakeholder, whoever it is, that is going through a tough time, the appropriate time to make that introduction to their local representative, whether it's their local House member or the local senator, is right there on the spot before we get to the legislature. Let them tell their story of what they've went through and how they've been injured by this third party. We talk about these nuisance claims where you have loss consultants that go into these lower socioeconomic neighborhoods, knocking on their doors, saying, listen, I want to come into your house and just do a free inspection. Before you know it, they have these homeowners filing 3 very low indemnity claims. Well, what does that do to the consumer? I'll tell you what it does. Overnight, when they file those claims, they're no longer insurable. They can't get insurance through Citizens. They can't get insurance through the private market. They either have to have forced place insurance. They either need to go to the surplus lines market. Who's disclosing that to consumers? Nobody is. But those type of stories and sharing with legislators early on, I think can be very impactful. So we can all work together to try to identify those stories and help educate our regulators and our legislators. And that's what we plan to do here at FAIR, working with anybody that's open to work with us and go down that journey.
Thank you, Paul. I think to try to keep us on time, I will say this. I think having worked in the insurance industry countrywide since 1974, I will say that I think geographically, there's no doubt that Florida is a peninsula. However, I think what we've seen over the last several years from claims procedures, practices, and protocols, Florida's an island. And I think, you know, if you work in any of the other states, you will see that what happens in Florida is different. I mean, it's objective. It's different. It's one of the few truths, as Fred said. I'm not making up that statistic, but it is much different in Florida. And I think that's part of what this discussion is about here. Is there's different parties that see it differently in terms of whether something is different in a bad way or different in a good way. Lisa, I'll let you wrap up 30 seconds as the former regulator in the group.
Thank you so much, Joe, and for this very distinguished team who I speak to regularly, almost daily or every week at least, just to listen and come up with ideas to make things better, educating our legislators. I think it takes a village, if I may use an old phrase that probably a lot of us may wince when you hear it, but it takes all these great minds to come up with ways to protect the policyholder, increase the communication, stop the bad folks that are knocking on doors and going up on roofs, and of course in the courtroom to try to change the dynamic there. I'll leave those that are listening with one final thought. Those that come to your front door, you don't know. Your friends come to your back door. So tell everybody you know not to answer their front door. Joe, thanks again.
Thank you. We'll make this available to all who registered as soon as we can, and it will be available online. We thank all of you as panelists, and I'm sorry we couldn't get to some of the questions that were submitted. We'll submit those to the group, and the group will be able to publish an answer to the questions we received. Thank you all.